I'm back. Sorry, I did not know that there was a 15-minute max capacity on Screencast-O-Matic, so I got cut off. We're almost finished. We just talked about posting from a general journal to an accounts payable ledger, and then now we're going to talk about posting from a general journal to a general journal ledger. So we need to post the subsidiary accounts payable accounts to the accounts payable ledger, and then we need to post accounts payable to the general ledger, the controlling account. So remember, when I pull the chart of accounts, I would pull the account and see the accounts payable balance. If I pull an accounts payable report, I would see all of the accounts, all of those subsidiary accounts that total that controlling account, right? So there's individual accounts that make up that main account. So we need to understand the difference between the two. So, transactions recorded in our general journal, which we've been doing, they can affect multiple accounts. So they can affect both our general ledger, as I'm showing you now, and they can affect our subsidiary ledger accounts. So when we buy, for an example, when we buy supplies on account, showing up above, we debit the general ledger account, and we credit the general ledger account accounts payable, but also the accounts payable ledger account Estes Supply. So you see, that's why we do that diagonal, because we need to have two post references there. So we are in real life, and I know I sometimes say this to you guys, but in real life, when we buy supplies and accounts, and real life with a computerized accounting system, transactions are immediately posted after they're entered. So you won't have to really worry about doing that. But in a manual accounting system, general journal transactions may be posted immediately, or at the end of the day, or less frequently. So it just depends on the number of transactions and really the type of transactions. So we're just showing the different options here. So whatever method is chosen, we always want to make sure that it's applied consistently. That way, and the most important part of applying it consistently is just so we know that, to ensure that all of our amounts are posted, right? And we can always check if they're posted if you do everything consistently, because you would put a post reference there. So if there was no number in the post reference column, then you would know that it's not been posted. So let's talk about posting to this general ledger. So you see here our transaction that we did in the general journal. So now the two accounts we've already posted back here to our accounts payable ledger. So now, it's going to go through all of those again. Now we're going to post to our general ledger. So we have two accounts we're going to work with, and that's supply store and accounts payable. Again, that controlling accounts payable account. So we are going to post a debit to supply store, and we're going to post a credit to accounts payable. So in this case, we were buying the supplies. Okay, so that's why it's a credit, because it's increasing the amount that we owe. We bought these supplies in account. This is not the purchases, returns, and allowance. This is the actual purchase of that account. So we have our date, our journal page number, the debit or credit amounts, our account balance, and then we always have to make sure we put that post reference. Again, consistency and making sure you write that, so if you leave off at the end of the day and come back the next day, you know where you've left off. So let's talk about, when is a transaction recorded in a general journal? So when the transaction cannot be recorded in a special journal. So we talked about all the special journals in previous entries, and again, we had some transactions here that we didn't pay cash for, and that we didn't use purchases for. So again, when we bought supplies for the office on account, that would be going in the general journal, because we cannot put it in a special journal. If we paid cash for it, it could go in the cash payments journal. When is the equality of debits and credits proved for a general journal? So equality meaning they total the same. When is that proved? So after each general journal entry is recorded. So after each time you do the general journal entry, you want to make sure in the general journal that our debits and our credits equal. So what is the difference between a purchases return and a purchases allowance? Remember, we talked about this in the chapter. One is where a whole item is returned, and the other is where an allowance, so the customer keeps the item, but a discount or an allowance is given at a reduced rate. So a purchases return credit is allowed for the purchase price of the returned merchandise. The purchases allowance is the credit allowed for part of the purchase price of the merchandise that is not returned, such as units that are damaged but still usable or of different quality than ordered. If purchases, returns, and allowances decrease, the value of purchases, wire, returns, and allowances credited to a separate account. This is a great question. So, again, we need to analyze our data. So better information is provided in purchases, returns, and allowances if they're in a separate account, because we can track those purchases and allowance, especially by period, to evaluate the efficiency of its purchasing activity. So we can see, again, as I mentioned in the previous video, are we having a lot of broken items, or are things, certain items, like just not working out and we're having to, people are returning them, or they're breaking, or what? It's just good for business to do an evaluation of their returns and allowances and to see what are causing problems. So anyways, yay, that was 11-1. So what I want now is you guys to do the work together, 11-1, and I want you to do, or excuse me, if you want to do the work together, you may, but what's required for the assignment is on your own 11-1, and then do the application problem 11-1. I have made separate accounts on, since my screen is showing, I might as well just go here. So here's our weekly schedule. So for tomorrow, you're going to watch 11-1 videos. Complete on your own 11-1 and application problem 11-1. Once you're finished, please take a photo and upload the assignment to the proper assignment on Schoology, the proper folder, whatever. So down here, you can see 11-1 on your own and application problem. So if you click on that, I don't have it because I made it, but you guys should have a submit. And if you just take a photo with your phone or whatever and upload it, I can grade it from there. That's fine. So I know it's not, then you don't have to worry about turning sheets in for me. If you want to scan it, you can, but otherwise you can just really take a picture with your phone. Here's the first part of my video. I'm going to post the second part here when I'm finished, but watch that. And I don't want you, if you can, I know some people just want to get everything done, but please just do the 11-1, stop, and then come back the next day and watch the next video, because I have not recorded 11-2 yet, so I'll do that tomorrow night. And so then I'll want you to watch that and then finish the assignment. So please just take a little bit at a time. I know sometimes this can be overwhelming. So just take one section at a time, do the homework tied to it, and turn it in, and move on from there. So watch this video, and then I have the due dates here. Due Thursday, due Friday, due Tuesday. And the reason I did Tuesday is because technically Friday and Monday are our Easter break. But I'm still going to make this due Friday, but I'll give you Monday off. So we've kind of had some time off, so I thought I'm still going to make you do this. But it shouldn't be too difficult. I hope that this overview has been helpful. If you have any questions, as always, please feel free to contact me. And I will be back tomorrow night to record the 11-2 video. So I guess that's it. So have a beautiful, beautiful day, and I will talk to you guys all later. Miss you.